Okay, good evening, everybody. Good evening and welcome to the first of Admiral Markets Market Pulse Weekly Update. Here we are, number one for 6th of November 2024. It's Paul here. And thank you for joining us. If you're joining us here live, okay, in session, or if you're watching this on YouTube streaming, it's fantastic to have you here with us. It is, as I say, the first of a series, a regular series of webinars every Wednesday evening at 7 o'clock London time, 1900 hours, depending on how you look at it. And invariably, what we're looking to do is to just give you a little bit of insight, okay? A little bit of insight, a little bit of help, a little bit of education, all wrapped up in taking the pulse of the market, both for here in the UK, but also globally, both for traders and also for investors. So lots for us to cover, lots for us to talk about, and we'll discuss as we go further into our session this evening. As always, we just begin with a quick risk disclaimer. You can take a moment there just to familiarise yourself with it. As always, remember that trading on margin does involve risk, and that ultimately you are responsible for your own trading decisions. What are we going to talk about not only today but throughout the all of our sort of market pulse webinars? Is we'll talk about how to understand and analyze global financial markets, how investors and traders can turn their analysis to their adventure, and how you can trade and invest with Admiral Markets, and in particular the solutions that we provide to clients, both in terms of their trading platforms, but also some of the additional sort of technological solutions that we provide to clients. For those of you who don't know me, my name is Paul. Traded for many, many years. Traded for funds, traded for clients. Primarily, I like to focus on trading FX indices and commodities. That's where my particular focus would be. We will talk about other asset classes. We will occasionally talk and show things like fixed income and bonds, things like particular stocks, etc. But FX indices and commodities would be where my particular focus is. And for myself, I tend to be a trend trader for my longer term swing and position trades. I don't want to fight the market. I want to ride with it. And then for my shorter term intraday trades, my scalps, that's where I'm more of a reversal and a mean reversion trader. So I'll be sharing all of those experiences with you as we go through these particular sessions. Of course, we are a little bit limited by time, so I won't be able to share everything in this first single. But as we go through our series, I'll be able to share elements of experience and knowledge, a little bit of insight that will hopefully help you on your own trading journey. I also appreciate that there will be people joining us here or watching this on the Admiral's YouTube channel. That is a case of understanding Admiral Markets, okay? Who are we, what can we offer, and what are the sort of solutions that we can provide to clients. So as you can see there, at Admiral Markets, they provide access to news and updates through established providers. There is a wide range of financial instruments and various asset classes that you can trade and invest with, multiple payment options, and a comprehensive education suite. And we have an excellent rating on Trustpilot. Of course, when it comes to education, well, there are regular webinars like this one with myself and other experts. Part of it is all about providing live market analysis. You will find podcasts with traders. You will find the premium analytics portal. You will also find the research terminal, which we'll maybe touch on a little bit later. And there is also now an academy platform. So, lots of content there in terms of educating yourself, regardless of where you are on your own particular journey as a trader, whether you be an investor, whether you're a trader. There is as I said, a huge amount of educational content that you can utilize to help you progress in your own journey. So if you are more focused on trading, Admiral Markets provide, as it says there, over 4,000 instruments in as FX and CFDs on commodities, indices, stocks, etc. With a pretty good, pretty standard leverage for retail clients, providing you with both the ability to engage with markets through both MetaTrader 4 and MetaTrader 5, and I'll be showing variations of that throughout our series. And also you have access to the Admiral Markets mobile app for those of you who like to trade on the go. If your sort of raison d'etre for engagement is more on the investing side, well, also Admiral Markets can help you there. As you can see, there's over 4,000 available stocks and ETFs, providing also fractional investing, the ability to auto invest in the mobile app, and also providing the MT5 platform, a web trader platform, and also the Admiral Markets mobile app. We talked about there are a varying degree of technological solutions that Admiral Markets will provide to you. So as you can see there is the research terminal available for both MT4 and MT5 clients. There's a web terminal version of MT5. There's also VPSs and investing calculators. As I said, there's plenty of additional support that you can tap into, all available to Admiral Markets clients, all available on their website or through your account representative, or through the actual client's portal. Okay, so as I said, I appreciate there are some people who join us who are new to Admiral Markets, new to trading, new to investing. So just letting them know, what actual Admiral Markets provide, and also, as I said, talking about, this is the first of what is our Market Pulse weekly update. I think it's fair to say, based upon we're doing this on the 6th of November, the day after the US elections, that there are always developments going on, both in financial markets and geopolitical elements that can affect every trader and investor's strategy. And so, financial planning requires having the right type of information as well as the right timing when acting. So, as I said, Admiral Markets are going to be starting this weekly webinar series in which we focus on how to navigate through the global markets and filter the information that comes our way. So every week, I will endeavour to look at the major themes affecting the markets this week. And when I say this week, here we are on a Wednesday evening. What I'll be doing is, looking at the kind of what is available or what we're expecting over the next week. So from this Wednesday evening to next Wednesday evening. So gives you an opportunity to just be prepared for that week ahead. What I'll also do is I'll do some market analysis of the major global markets, regardless of whether you are, see yourself as a trader or whether you see yourself as a stock market investor. Having a picture, an overall analysis of the major global markets helps you. It just helps you build a picture, helps you understand context, right? Understand context of what's actually happening. So, we will look to provide that every week. And also, we provide an opportunity for discussions about trading and investing. For those of you here directly in the room, if you've got particular questions or comments about trading or investing, perhaps maybe you've got a challenge, or perhaps maybe there's a question you have, please feel free to put them into the chat box. I will try and help and support you as much as I can within the remit of our sessions here every evening. But it gives you somewhere to go to actually sort of, as I say, have discussions about your trading and investing journeys. And as I said, give you a little bit of insight into some of the tech solutions that are provided by Admiral Markets UK to those clients, which, you would have access to. And the overall idea is to help just educate and provide insight on markets and the ways traders and investors can engage with them. So there'll always be plenty for us to cover. I think it's fair to say that this year, 2024, has been a rather eventful year. I said it right in the first week, and it has played out that way. There's been an awful lot going on. And what we want to be able to do is to give people the idea to understand that bigger picture, to understand that context, so that you are in a position to turn a threat into an opportunity. That's all, okay? That's all. It gives you that opportunity to understand it, so you're in a position to make better decisions, okay? And that's how we look to help you. So it'd be interesting to know, of those of you joining us here today in the live session, what is your own experience? Are you a trader? And in which case, are you a short-term trader? Are you a swing trader? Or are you a position trader? Or is your focus more on investing in terms of just whether it be buy and hold, or whether it be longer term position trading? It'd be good to know what your own experience is. It'd be good to know what your own focus is, just to help me give me an idea, okay, of who we have here in the room. And also, in terms of what are the particular subjects and topics that would help you for me to focus on. I appreciate, with trading and investing, there is a huge spectrum of topics that we can tap into. And, I'm very happy to try and help and make these sessions as beneficial and valuable to yourself. So please, by all means, pop them in the chat box. If I can help you, I will. But we'll see how we get on there. So Peter, great to see you, Peter. Okay, Peter says he's a short-term trader and a longer-term investor. That's great. Okay, that's fantastic. That helps me enormously. Okay, in terms of understanding, where you're coming from and what is important to you. And I will try my best to build that in. Okay, as we go through sessions and as other people join. As I said, please feel free just to put in your comments and thoughts, and we will try and help you as much as we can. Okay, so as I said, I will always try and start with a little bit of a look at this week's themes. Okay, so that's from this Wednesday to next Wednesday. Okay, I appreciate if you're not able to watch this live, you might be watching this the next day or so. But it is still valuable and insightful information. So of course, we can't really talk this week about addressing the major element of this week, which was, of course, the US elections. Okay, so I was up quite late last night watching that until about 2:30, 3 in the morning, and then back in sort of 7 o'clock this morning watching through, because invariably, A, it's fascinating on many, many levels, but also B, I'm intrigued to see how that was affecting markets. Okay, what we were likely to see. So, of course, whilst we wait the absolute confirmation as I speak here and now, the reality is that Trump has declared victory. That has had an impact on markets, which we'll look at in a moment. And when we have a little look at the charts, we can have a bit of a discussion about what might be both the short term and the kind of longer term impacts upon that. Okay, it's going to have a huge impact not only in the US but globally, okay, across the whole world. And of course, as traders and investors, with access to global markets, it's in our best interest to be on top of that. A little bit closer to home, okay, a little bit closer to home. Tomorrow, we have the Bank of England's MPC meeting there, okay, that's at a sort of midday UK time. Most people are expecting a cut there, okay, a cut of about 0.25%. Now, of course, anything that changes that is where, that kind of induces the sort of volatility and makes things a little bit exciting. But, the vast majority of people are expecting a 0.25% interest rate cut. What will be interesting is to see what the Bank of England has to say about that after Miss Reeves' first budget from last week, okay? You can draw your own conclusions about, the budget itself. Ultimately, as traders, investors, we're just looking to see, how can we turn that into an opportunity to engage with markets. Also, in a curious and interesting way that we've played out, tomorrow evening, Thursday, is also the US Federal Reserve FOMC meeting, their interest rate decision from their central bankers, Mr. Powell. Once again, most people are forecasting and have baked in a 0.25% interest rate cut. If there was to be anything different, that is what would put the cat amongst the pigeons. That was what would induce a great deal of volatility. But what we are likely to see, of course, as I said, there is a 0.25% cut in the UK and a 0.25% cut in the US, and I think people will be interested to see what is the plan going forward, because I think that the plan from maybe even a month ago, even that month ago, it will have changed both in the UK and the US, and so traders and investors will be keenly anticipating any kind of comment or insight that gives people an indication of what the likely trajectory is to be. There are, there is a great deal of data coming out, and undoubtedly there will be repercussions and shenanigans from the US election that we might see over the next couple of days. But in terms of data that I am particularly intrigued myself, and that I will keep an eye on, and that I think is worthy for yourselves. Well, next Tuesday will be the 12th of November, and will be the UK jobs numbers, so people will be taking interest in that. And then next Wednesday, Wednesday afternoon before our second webinar, we have the US inflation numbers, the US CPI, and that will have an impact on both US markets and the US dollar. So there's plenty going on, all right? There is plenty going on, and if you've joined me in any of my other previous webinars, I'll talk about how if you're a new trader, I don't necessarily expect you to be able to analyze the economic data, but it is unbelievably important to know when that economic data is coming to market, and you can understand and find that from an economic calendar. There is an economic calendar on the Admiral Markets website, and there are other ones on the internet as well. So there is no excuse not to sort of be able to check an economic calendar and understand when the kind of major economic data is coming out, because it will have an impact, and as a good trader, as a good investor, you want to be on top of your business, and one of the ways you do that is by keeping on top of the economic calendar. So there are also, as I said, there's lots of other data. There's, we are in earnings season from the US, so there's quite a few companies, big companies, that will be also releasing their US earnings. But I think, as a starting point for today, these are some of the big themes that we'll be considering and looking at going forward through this week. If there's something else that you think is worthy of us having a conversation about or picking up on, by all means, once again, you can place that into the chat box, I'm very happy to take on board. I'm very happy if there's something that is of interest to you and that we can have a look at it. I'm very happy to do that. We want to make these sessions as beneficial as they possibly can for everybody. Okay, and also, this is session one, and for the first few sessions, I will repeat a couple of the slides because they're just really about setting expectations. And I think it's important for us to set expectations at the beginning, just in terms of, what we can cover, what is our remit, what I'm looking for, all right, and also what I would expect of good operators, good traders and investors, engaging and conducting themselves well in the markets. So you hear me talking about, before engaging in any trading, investing, just setting a few simple rules and expectations. And in a future session, I will always add in a slide or two, just giving you a little bit of insight into my experience, and I'll talk about, how I go about investing differently from how I go about trading, and I'll share, a little piece of information and insight there that way as we go through. So Peter said, I wonder if people would find it useful to do a session just on the Admiral Market site, showing where all the different features are, how to find them and how to use them. But that's great feedback, Peter. That's much appreciated, and I'm very happy to build that in. I'm very happy to build that. I'll make a note and stuff, and in our one of our future sessions, very near future session, we'll go through the website and we'll go through the platforms, and I'm very happy to do that. I think that is very beneficial, right? And as I said, really appreciate any kind of input or feedback like that. That's excellent. Thank you very much. As I said, before engaging in any trading investing, let's set a few simple rules and expectations. Now, I will go into these rules in more depth as we go through our series, but for tonight, as a baseline, remember, risk management is absolutely key, so ensure that you honour it. If you're completely new and yet just to really understand risk management, it is unbelievably important. If you go onto the Admiral Markets website, either in the webinar archive or on the Admiral Markets YouTube channel, you will find a huge plethora, a veritable smorgasbord, if you will, of fantastic content from myself and some of my colleagues that cover a wide range of trading and investing topics, risk management being one of them. You will find quite a few videos in there. Please, by all means, make yourself available to them, and they will help you raise your knowledge very, very quickly. As I've just talked about, know what news is coming out for that week ahead. Right, there is no excuse not to understand that when you have access to an economic calendar on the Admiral Markets site and also elsewhere on the internet. What I generally tend to find myself, especially for kind of longer term trading and even for shorter term trading, is that if possible, what you should do is conduct your analysis before making decisions. What do I mean by that? Is that what I find very often is that people will get up, they'll wake up, they will open their charts and do their analysis in the early morning move in the market, whether that be in the early morning in the UK, whether that be in the early morning in the US, Asia, etc., wherever you're watching this. And so invariably they get caught up. Okay, markets start moving fast, like today. Okay, like today's responses to the US elections. And that basically distracts the trader and investor, and then invariably of doing good analysis and creating good plans, they get sort of T-boned into sort of impulsive decisions, right? And that rarely works well. Always makes it might seem sort of almost like too obvious that you should have a good internet connection and that you are rested and prepared for your session in front of you. Might sound like common sense, but I've been doing this long enough over the years, and I've been caught, short myself. Okay, on the odd occasion over the years, about just making sure you've got good internet connection, that you're rested, you're prepared for the session. If like myself, you spent most of last night up watching the TV, watching the election unfold, all right, you have to realize that will have a knock-on impact into your decision making for your trading or investing session. Here for Admiral Markets UK, we will talk about long-term trading, okay? But also what you have to remember is if you are an investor and if you're investing using the Admiral Markets MT5, you have to remember that we are long-only buyers, okay? We can buy and sell as traders on the other Admiral Markets platform, but on the Admiral Markets UK investing platform, we are long-only buyers, and so I will talk a bit more about that, about the difference between that, so that people get an understanding of what it means to be, let's say, a trader, what it means to be sort of an investor, and we'll talk about that as we go through the whole series. So maybe you have other expectations, maybe you have particular specific rules. That's absolutely fine. As I said, this is just a very simple baseline, okay, so that you know where I'm coming from, what I'm looking, how I'm sort of analyzing markets, and what I bring to the session, so that you're in a position to understand. You're not surprised if I talk about one thing or I'm not talking about another thing. One other part of setting expectations is that most of my work is done on charts. Okay, whilst I will use other technology and things like the Admiral Markets research terminal, etc., the vast majority of work and the vast majority of what I will share with you is from my technical analysis of charts. All right, so just as I said here, setting expectations. My charts are pretty simple. Okay, pretty simple. All right, so I do it on some of my kind of my own. I might have a bit extra, but as a general rule, what you'll see on my charts is that I'll have price action candles. They'll either be blue and red or green and red. Okay, well maybe we'll try and do blue and red. There's a reflection of some of the colours of Admiral Markets, aren't they? But what you will see is that I have a 20 SMA, a simple moving average, which is the blue moving average you see on my chart. I have a red 50 simple moving average, okay, and a green 200 period moving average, and also the grey little applets, triangles. Those are fractals. Okay, they're in grey and they're above that. I will show you where they are on charts, so you can find them yourself. I'll explain a little bit what things like fractals are, because I appreciate some people may not necessarily know and understand them, but I like to try and keep the charts, as simple as I can. But I just want to share that once again, I'm just setting expectations. So when I'm putting up a chart, what I'm talking about, and why I'm talking about, well, then invariably, hopefully, it can help you in terms of understanding where I'm coming from, and actually help you see what I am seeing. Okay, so I appreciate lots of people have lots more, indicators, etc. on their charts. Lots of people will have, additional things like oscillators, so things like RSI, CCI, etc., stochastic. That's absolutely fine, it's absolutely fine. I just tend to be less is more, I work on a less is more basis, and I'm very happy to do that, and I would normally sort of tell people that less is more, and as in, if you're struggling, to make decisions, most people add more indicators. Actually, it might sound counterintuitive, but actually what I would normally tell people is to remove indicators, to actually remove elements, You just want to be able to make a simple decision. And sometimes what we find is that, with too much data, we overwhelm ourselves, And I see new traders and investors that, their charts, they've got about 10 different moving averages, and they'll have Bollinger Bands, and they'll have Keltner channels there, and they'll have the MACD and the stochastic and the RSI and the CCI and some other indicators as well. And invariably what happens is the chart just kind of overwhelms them. It's just like, it's too much. So just as a little sharing of experience with you from having coached lots of traders over the years, is that if you are struggling with making decisions, well, then actually start taking stuff off. Don't add more, take stuff off. Less is more. Think about that. That's what I've found over years and years of both trading and investing. It is about you being able to make a decision. So hopefully that helps. Just quickly, for once, because as I said, I appreciate you, Conno, and then we'll switch across the charts. Appreciate that. If you've been a trader and you're interested in investing and getting to know, well, what do Admiral Markets offer? Admiral Markets will offer UK FTSE stocks, UK ETFs. Just remember, not all of them, they might be based in the UK, but they might not be an ETF of the UK. It could be based here in the UK, but it might be an ETF of gold or oil or S&P 500, etc. So you just need to be aware of that. And there's also the Admiral Markets Research Terminal, MT5. And I will share to people that if you are engaged in stocks, the London Stock Exchange itself is a very useful website. They provide a heat map of the FTSE 100 constituents, and there's a great bit of detail on there that can actually help support you in your decision making. And for today, as we sort of just share with people, in terms of an investing account, for those of you who are maybe coming from trading to look at investing, with an investing account from Admiral Markets, you can buy all of the UK shares mentioned in this webinar and the other ones we've been providing here for the last month or two. You will find them on the Admiral Markets YouTube channel. You can basically open an Invest MT5 account, log into the dashboard, open either the web trading platform or download the MT5 platform as I have, and you can search for shares and click the symbol to open a price chart and then create a new order. It's actually it is quite simple. So as I said, I appreciate that there are some people. Peter said earlier he's a short-term trader and a long-term investor, which is fantastic, but complements us. But I do also appreciate that some people, they may have been focused at being a trader, or they may have been focused at being investing, and actually is looking about, well, how can we work both of them together to help complement and support ourselves. So why don't we switch across the charts and have a look at what's been going on in the world, because it has been a rather interesting 24 hours and a rather interesting week. So if you just bear with me one moment, I'm going to start switching across to the platforms, and we'll have a little look at what is the pulse of the market at the moment. So as I said, just bear with me for one moment, and we will try and bring that up. So I'm going to start. Yeah, super. I'm hoping that you can still hear me. I'm hoping that you can now see myself, but also now see one of the Admiral's platforms, okay, Admiral Markets platforms. What we've got here, as I said, we will look at both the Admiral Markets investing platform and also the MT4 trading platform. So that's just as part of helping me provide you with the insight, okay, and with the overall analysis of the market. So I suppose why don't we start? What I've tried to do is to just basically start with kind of almost like new charts, okay, new charts here. This is a chart of the S&P 500, okay. This is the weekly chart. Excuse me, the weekly chart. And I'm hoping that you can see that has been in quite a significant trend there, okay, for certainly for a year. This was here about October of last year, so we have basically, been in a year of a nice move up. Now, just to begin, just to sort of set the tone, whenever I open a chart like this, what I'm particularly looking for is, I'm looking to draw in significant levels of support and resistance. Sometimes they are very, very obvious. Sometimes, I am helped by, as you can see, some of these fractals. Now, let's get the old drawing tool up here just to help people. I appreciate if you're very new to trading investing, you might be saying, well, Paul, what is a fractal? What is it? Well, when it prints an up fractal here, what that means is that high there was higher than the two candles before and the two candles after. And so it's like a V shape there. In the same way, a down fractal here, when we have one here, that means that invariably what we have is this low here was lower than the two lows before and the two lows after it. And so it provides there. Okay, so just think about for whatever reason, price has come down to there and it has bounced off. And in the same way, price rallied up to here and then it bounced away. Okay, it bounced lower. That starts to become very helpful for us when we start to look at doing our overall analysis to get an idea. So I'm just going to quickly draw in some levels of significant support and resistance that I'm seeing, that I'm interested in. That's just literally using the horizontal level charts, okay, just to draw these in. Start at the monthly, go down to the weekly, down to the daily then, okay. One of the great things about the MetaTrader platforms, both 4 and 5, is that once you draw in your levels, they'll then, in fact, basically what you can do is it remembers them, so they're there, okay. So start on my monthly, going down to my weekly is okay, and now I can start to become a little bit interested and see some of the kind of particular levels of interest for me on the weekly chart. What I'm really looking for is, ideally, I'm looking for areas which are there are significant areas of bounce, okay, or there's been a pause there, okay. Just for the purposes of today, we'll go deeper into it as we go through. But what I'm trying to do here is just to get an understanding of now. The reason we're looking at here is this was the last fractal here. Okay, this was the last fractal here. And if you don't know where a fractal is, just go insert, okay, insert, and then indicators, then Bill Williams, and then you'll see fractals there. Okay, and then you can amend the fractal. I've got these fractals quite big to be able to just help you at home or wherever you're watching this see it. But actually, what we can do is you can make that smaller, okay. And once you've trained, you get a bit of cognitive recognition ability, and you're able to identify and see them yourself, okay. But for the purposes of today, that's where you find a fractal. So I am intrigued because we had an up fractal here, and then this is the weekly chart. Remember, we'd actually sort of come away the last couple of weeks in front of the US election. That's not a major shock. You can see we've been in a great uptrend. We've come down, but you can see what's happened here, hasn't it? And if I go down, okay, down the timescales, what we can see is, at the end of last month, we had a bit of a sell-off there, but we didn't break the 50-period moving average. See the red, simple 50-period moving average, it acted as support. And look what's happened over the last 2 days, okay, as we've gone in towards the election. And as I go down to the 4-hour chart, okay, what we can see is that, last week, okay, price sold off, and then really people went sideways. People just pretty much went sideways, all right, for, you're going into sort of Thursday and Friday, and then into sort of Monday and Tuesday. You can see that actually, look at how the price just goes a little bit sideways. It's coiling up, okay, because the major players, they're either trimming their positions, or they're sitting on their hands, or they're not initiating a new position until they get some sort of clarity from the election. And Bosch, we can see here, you can see for yourself that that's a 4-hour chart. Every candle is a 4-hour. And you can see over those last sort of, 24, 36 hours, that has been quite a stunning move. As the markets, have started to see that, Trump was, maneuvering into a position. The view had always been, and had been on for a few weeks, that Trump would be good for the markets. Trump would be good for business, as opposed to Harris maybe not being good for business, not being good for the market. So as it became clearer that Trump was likely to win, you can see the impact that has had, and that is the same across the majority of those US in equity indexes. Dow has been the same. This is the S&P 500. S&P 500 remains the bellwether of the world, regardless of all of the, let's say, sometimes negative media that talks about these things. The reality is, it's still a bellwether for the world. When you can see this, that is a very clear move. Remember, even with the huge amount of algo trading that goes on in markets these days, markets are still a reflection of human psychology. Markets, like humans, we hate uncertainty. All right, we hate uncertainty, and we will do as humans whatever we need to get that certainty. Even if the certainty isn't maybe the best outcome, we love certainty. And markets are the same. Part of that, we just looked at, part of the price coiling up, sort of tightening up in the run-up to the election, is basically people sitting on their hands, people not wanting to take on board the uncertainty. But once there is certainty, once there was the certainty of the result, Bosch, price just barreled itself away there. Absolutely, it rolled its way. Now, before everybody starts getting overly excited and etc. I always have one caveat, namely, this time tomorrow, we will be having the US Federal Reserve FOMC meeting, and whilst, as I said earlier, most people are expecting a 0.25% interest rate cut, what they will be taking very big notice of is if there is any kind of change in the messaging, or the communication around that, because of course, based upon what we're seeing in terms of a new administration, is going to mean new policies. People are, once again, there's a bit of uncertainty because they'll be thinking, what will Mr. Trump do? How will policies change from the last administration? So, what I would suggest is that, what we have seen here is a relief rally, and then people will probably start to wait to see what the FOMC has to say for themselves, the Federal Reserve, and then from that make their decision, on the direction for the rest of the year. Remember, we're into what would be the second week of this next week, will be the second week of November, and also what we'll be into is the kind of, you're running down sort of 6-7 weeks to the end of the year. Then you'll be running towards the initiation ceremony, basically the ceremony for welcoming in the new president. I think that's the middle of January, second or third week of January, and then of course, then he takes over the job, and and then it will set. So it means the next 3-4 months could be very interesting. But for ourselves here today, that has been a great run. That's a fantastic example of a relief rally when markets get certainty about what they know is going to be happening, and we can see that it's done very well. And even this afternoon, this afternoon session, just looking at there was a little bit of a bump earlier in the day at the start of the American session, but you can see for yourself, that will have been people who taking profits from positioning themselves early. There'll be people who are on the wrong side, who are expecting a different result, and they'll probably stopped out of their positions. And then we're getting a little bit of clarity. As I said, people are just on the hourly chart; they're just working their way up there. So you can see, it's very positive for the US indices. All right, so take that on board as a way and a means to particularly look at it. So, if that is if that is the US indices, let's have a look at the US dollar. Let's have a look at the US dollar and how is that kind of playing out. So this is a chart of the euro against the US dollar, okay, on the weekly chart, and what we will look to see here is of course what we've seen over the last few weeks, okay, is this basically, we saw this dropping down over the last few weeks, okay, and that, remember, that is a reflection of some euro weakness and US dollar strength, and people were starting to think that the dollar was strengthening because people were starting to think that the markets, okay, business people in the market started to think that Mr. Trump was likely to be winning, and that's what that is what has basically shown ourselves there. But then if we go down to the daily chart, we had a reflection of that, and you can see, if you think about this is the daily chart. So in August, this was August, okay, the euro strengthened and the dollar weakened. In September, we kind of topped out, okay? Some people might say that was a double top. Some people might say a triple top. Some people might say it was a block there, okay? But, it was what I would call the Grand Old Duke of York, which is a kind of, it's kind of an old English kids poem. He marched price up to the top of the hill and then he marched it down again. And that's what we saw for most of October. But then, interestingly, what we had, euro has been weak generally because of A, the European economy, B, the German economy, C, the kind of issues going on to Eastern Europe. So there's issues there. But we had basically the euro rallying there a little bit the last couple of days. Hopefully you can see that. Once again, as we said earlier, this was probably people who had dollar positions. They're basically either sort of going long to euro to hedge in case of there being real volatility. And so, as I said, we saw euro sort of strengthen over the last couple of days, but you can see for yourself here. Look at that maneuver there. Okay, let's just maybe go down to the 4-hour charts. Hopefully, you can see there, bosh, how price has just basically collapsed there today. So remember, if that price is collapsing there, that means is the euro is weakening and the US dollar is strengthening. So once again, Trump has been good for bullish prices on the stock market, is also at this moment good for bullish prices, okay, on the US dollar. So that is giving you a little bit of an indication, early indication of how markets are seeing Mr. Trump's policies reflecting in the markets, right? So that is, I think it's whilst we're here, it is a fantastic opportunity to basically to see in live, okay, in real action, how markets are reacting and responding to that major political event, and also to the major shift. You can look for yourself there. Let me just let's just 1 second. I've got this. Let's just bear with me 1 second. So excuse me. There we go. So, from being up here at about 109.30, okay, 109.30, we've been as low as, what's that, 106.80. Okay, so, that's what's about doing top of mental arithmetic at the end of a long day, about 250 pip drop there. Okay, 250 pip swing in terms of dollar strength and euro strength, right? So, once again, that's what we're looking to take on board. And if we want to go closer to home in terms of the pound against the US dollar, that's what we've seen there as well. Okay, this is the weekly chart of the pound against the US dollar. For months, we saw sterling strength, okay, and dollar weakness. That reversed, okay, about 6 weeks or so ago. This is what they call an evening star formation, and then price drifted all the way back down to here, the 130 level. And then if I go down to the daily chart, we could see that we were already weakening, and that is a case of not only dollar strength but sterling weakening as well, as we've got the new Labour government, and as people were worried about what Miss Rees would say in her budget, that was leading to strength in the dollar, okay, and weakness in sterling. But then a little bit like Europe, the last couple of days we had a little bump there, okay. Hopefully you can see a little bit of bump in sterling, but then as the results came out, you can see once again, you can see there, as the results started to be called out, how that basically turned around and how that is just reflecting dollar is strong against all of the majors, euro, okay, against sterling, Swiss franc, okay, Aussie, Kiwi dollar, Canadian dollar, Japanese yen. And that's, and if you've joined me in previous sessions, I've always talked about, you can do very well in terms of analysing markets, in terms of FX markets, by just getting a good handle on what the US dollar is doing. The US dollar is the big daddy of the FX markets. If you're able to look at that, okay, and understand it, well, then that gives you a great context, okay, gives you fantastic context to the markets, and we can see that that's what's happened here, and we've come back down to previous lows. So, once again, that's showing sterling weakness, dollar strength. So you can look at this across the board. I'm not going to go into too many, but just as a Kiwi dollar, okay, 4-hour chart. The Kiwi dollar did the same, didn't it? You can see it's just basically reacting there, right? And that is just that is dollar strength, Kiwi weakness. That's what we see there, okay. So we've had a little look at the index, okay. We've had a little look at the dollar. Now, of course, I appreciate a lot of people will be interested in gold, because gold has been, a really great asset, okay, in terms of to trade and invest this year, and also to learn from in terms of understanding what good trends look like. So if I look at gold here, boom, let's have a little look at the weekly chart. What we can see here, okay, this is the weekly chart on gold, and you can see it. It has been in a phenomenal trend. Those of you who've joined me for previous sessions, you hear me talk about, good trends leap off the chart at you. All right, you should not need to force it. If you find yourself that you are forcing it, it is not a trend. Good trends leap off the chart. The challenge we all have is that markets tend to only trend like that 20 to 30% of the time. All right, so as I said, good trends leap off the chart. If you're having to force it, it isn't there. Go and engage something else. But for new traders and investors, all right, most of us want to engage with markets through the medium of trend trading. Okay, this is what I like to do on my longer term. Position trading, okay, holding, swing trading is, I don't want to fight the market. I want to actually ride with the market. And one of the reasons I'm intrigued in this is, as I said, I'm just zooming in there, and you can see, hopefully you can see that there, as I said, we have just worked our way up here. The 20 period moving average, remember this is the blue one, that has just, that's just so far, it's just provided dynamic support there. But what I was intrigued is, even though we have pushed to new levels, all right, last week, this is the weekly chart. Last week, this, we printed this, okay? We printed a bearish reversal pin bar here. Now, when you have a strong trend like this, it's the old, I appreciate it's an old English saying of one swallow doesn't make a summer. One candle doesn't necessarily, mark the end of a trend. However, what you have to remember is, of course, gold is priced in dollars. Gold is priced in dollars. So if there has been a shift in the dollars, okay, remember we just looked at how dollar prices just coiled up, okay, everybody just started to go sideways in front of the election. That would also explain, okay, why basically gold, having had a fantastic run, seems to, okay, there is a I would call this like a small tactical reversal, okay. I wouldn't necessarily be saying, oh, that's the end of the trend, but that price action there is not particularly bullish. What I'd be looking for is here to see how this down fractal here, that's actually what I'd be looking for. I'd need price to break that, and then break that 20 period moving average to basically to convince me that the uptrend was over now. So I will be watching that. That might be a scenario that you particularly want to take a look at yourself. Okay, just keep an eye on that. But certainly, if I go down to the 4-hour chart, if we go down to the 4-hour chart, remember we've just looked at a weekly pin bar, and if you think about that, this is a price started there at the week, okay, and it's then basically it ended there at the week, okay. So price had gone all the way up, okay, and then it came all the way down and ended here. Not massively different from where it entered the market. So that is why on the weekly chart, why you have a weekly pin bar, because that's actually the price is done there. And I appreciate, when you're new to trade, you maybe don't see that, but with experience doing the analysis, you pick that up, you get into it, you get to see that. But then look at what we've done this week. If I just look at that, hopefully you can see that. Just we've had this is the 4-hour 50 period moving average, which has been supporting the move. But then actually at the end of last week, we start to wrap around it. And now this week, look at how, let me just clear these down here, okay? What we started to see was that every time price came up to it, it couldn't actually get above the 50. It basically dropped away. And then as you can see here, bang. As the traders, investors got certainty that Trump was likely to win, well, then invariably that's what we saw, shorts on gold for two reasons. One, dollar strengthened, okay, and dollar strengthening is going to have an impact on gold, but also, okay, that there's the certainty of understanding that market, and also a case of remembering that, gold is seen as almost like a safe haven in times of worry, times of concern. This is also a case of markets reflecting, I think, that they do have confidence in Mr. Trump and his management of the economy, okay? And what is if the US economy is going well, then generally the world tends to be in a better place. Generally, I probably that might be a little bit simplistic, but as a rule of thumb, that is what I'd be suggesting. And so, as we've seen that, hence why we saw gold drop there from what's that roundabout. From it was around about 2,750 down to about 2,650. Okay, so $100 in a day. Okay, that's quite some move. But what I'm hoping is that I appreciate this is our first session. When as we go in deeper, we'll add and build more. But I'm hoping you can start to see how good for stocks. Trump's win is good for stocks because the equity indexes have rallied. Good for the dollar, all right, but it's also taken the sort of wind out of the sails of gold in terms of the way it's looking to operate. And now I'm looking to, as I said earlier, just go back up to the weekly chart. Now I'm looking to see, well, actually, is that are we now going to basically sort of have a little bit of an end in terms of the this fantastic up gold trend? As I said, I would probably need to break that low fractal and break also the 20 period moving average, which by the time it gets down here will probably be in here. So I could see us working our way down there, okay, and then it would be making a decision of is it going to bounce and go higher, or has it run out of energy and then go down to the 50? So that's my scenario at the moment. Just watching it as a swing, okay, as a swing in a position. Longer term guide, that's what I'd be particularly looking at there. Okay, so I hope that's kind of helped, just give me a little bit of insight, a little bit of sort of helping you build a picture, helping you understand the context of what we've seen going on. Just looking at what we have charts here that we can have a little look at. So yeah, one of them that is well, we also have oil. Okay, how has oil responded? Okay, so if I go up to, and this might be we're looking at just, let's see, maybe we might need to put a newer chart up here. As I said, Peter made a good idea, that a good suggestion that we can look at going through the website, going through the platform itself, and we will look at that. Let's just see if there's a this might be a better one here for us to look at to utilize. Okay, yeah. So of course, let's link it into the election. Miss Harris was very much towards, very anti-oil and very much towards renewable energy, net zero, and all that. Mr. Trump was much more comfortable with oil, with fossil fuels, and so of course whoever won that was going to would have a bit of an impact on the oil situation. What I've been looking for as a kind of on a weekly, let me just draw this. Maybe I can draw this a little bit better for you. Is what I had been considering. Let's just clear this down, put this in better for you. I've been kind of looking at, we'd had, there we go, hopefully you can see, kind of a trend line there, getting lower there, but also on the sort of low thing. And this is another thing that fractals are very good at. They're good at for helping you recognize and understand when there's other trend lines. What I was looking at is that, we've had once again, the 50-period moving average, okay, is sloping down, and the last couple of times that price has been up to it, it has bounced off it. And then we've actually had support here, okay, and the price level is rising there. So I personally look at that, this is kind of price coiling up. And so two reasons for it. One, once again, people don't want to take on too much risk in front of the US election. But now we're there, people are starting to think, well, actually, okay, how is this going to impact, how is this going to impact the price of oil? Because not only is Mr. Trump a very pro fossil fuel, he's also clear on the US being energy independent, and of course he also wants to export any surplus to help the economy. He also, it will not necessarily intrigued or interested in getting involved in some of the conflict that has been going on in the Middle East. If anything, he's probably likely to basically sort of try and draw that to a close, because he knows in doing so, well, then invariably that will take stresses out of commodities markets and the oil markets in particular. So, as I said, I still think this is prices coiling up, and I think what will happen is people will keep an eye on this to see what impact this has, what impact Mr. Trump has in terms of being able to sort of impact the price of oil going forward. There'll be some people say, well, actually, if he is basically exporting excess oil from America, if he does manage to invariably quell conflict in the Middle East, well, that actually would drop prices of oil. Okay, that would drop prices of oil because, of course, there's less. There's more supply. B, there is the not the anxiety of conflict impacting supply lines. But then equally, what could be said is, well, actually, if those things happen, well, then the economy will grow. The economy will grow faster, and if the economy grows faster, it needs more energy. So actually, they could create demand for oil. Okay, and that oil prices could rise. So normally I like to work with one side of the market, identify a bias and work it. But in this particular case, I would openly admit I'm sat on my hands, waiting to see how that particularly plays out. Okay, and when the market is like that, that's fine. I don't mind. I don't, trading and investing isn't about being a hero. Okay, I'm very happy to let the market show me its hand. Let me have the market show where it wants to go, because there will be a trend after that, and then I'm able to take a little piece of that as part of the way we look to go. Okay, so unfortunately we are running out of time, so it's just bear with me one moment. We'll just hopefully, he says. Bang. Yeah, as I said, I'm hoping that Abel, you can still see me, still hear me, and that also, you can see see the slide. So just to conclude, ladies and gentlemen, this is, it's a new series for us, new webinar series for us. So I will hope that you'll join us every Wednesday, okay, at 7 o'clock London time for the Market Pulse weekly update, where we shall look at the major themes affecting markets this week. A market analysis of the major global markets, and I appreciate today we didn't really maybe look at stocks or equities investing. That is just a reflection of the time window that we find ourselves in terms of the US election, and then of course the Federal Reserve meeting tomorrow. As I said, I welcome any discussions about trading and investing in your own thoughts and ideas, and we'll also have a little chat in future sessions about some of the technological solutions that you can have access to that are provided to you by Admiral Markets UK. So, as I said, hopefully you'll join us next Wednesday, 13th of November, 7 o'clock. Okay, and as you join me and as we build our community, well, then we can focus more and more on charts and the actual opportunities. Today was all about introductions and setting expectations, but we'll work forward to that. So, as always, we should hopefully get a check your inbox for a webinar link, or you can register on the Admiral Markets website to basically be invited to the future sessions. And if you have any questions, okay, if you want any corresponding information, okay, then by all means, I said you can visit the admiralmarkets.com website, okay. There's also the email address, contact number, and also the YouTube channel that you're able to work with there to effectively, contact us and to also to watch that. So. Peter says, great session, Paul. Thank you. Listen, you're very welcome, Peter. Okay. Thank you, Andre, for sticking his thumb up there. That's fantastic. Okay. So just 1 second here. It's a case of here. We just. Bang. Yeah, it's just a case of just to finish our session, just to say thank you very much for joining us, ladies and gentlemen. Hope you found that useful. Hope it's given you a little bit of help and insight. As I said, there's going to be quite an eventful few days, a week ahead for us. Okay, but is it ever so? Is it ever so when you're engaging with trading and investing? I wish you the best of success with your own trading and investing endeavors. I hope that you found this useful, and I'll look forward to speaking to you next Wednesday, 7 o'clock, for the next of our Market Pulse weekly outlooks. Okay. Trade well, everybody, and I will speak to you soon. Many thanks.